Good morning, everybody, and happy Thursday. Happy post FOMC. We had an amazing FOMC yesterday. We were actually able to take two trades um, in our premium group in Ascend, and A Train was able to somehow manage to get QQQ puts on options right before that crazy push down um as the press conference started. He was able to grab puts literally like at the top of yellow box, which was insane. And then I was able to grab ES shorts at 69.20 um at at this retracement, and we were able to squeeze 19 points out of shorts on ES yesterday. We were obviously gunning for our final trim to be at low of day again, and then actually all the way down to 804, which was where our current ceiling was placed on ES. So we were looking for another about 130 points down. We never did get it. It was actually, um, all things considered, a pretty boring FOMC, if you ask me. To only have you know, about a 60 point range was a little bit boring for me. So A Train was able, I think, to squeeze about 200% out of his QQQ options at one point, and we got 19 points on ES. So very, very good day. We never did end up going up to the level we marked yesterday, where we had those large open states at around like 70 to 77. The zone that we ended up marking in the morning actually was, I think, like 64 to 70 or something like that. And right before FOMC, we rechecked all of our open state levels because we had a lot of this consolidation throughout the day, which isn't that surprising, right? Everyone was waiting for the press conference. And we ended up revising our zone up a little bit from 69 like 64. The bottom of the zone ended up being like 69.70, and we had the zone go all the way up to 69.77. So we'll see if there's still some opportunity up there today in fractals. But as of today, we're seeing pretty good range on ES actually. We've gone both to the top and the bottom of our average range on our yellow box. And we've been so far staying within the range of our ceiling and floor. I'm not paying too much mind to the ceiling and floor at this point, obviously, because we're going to go look at our market maker data um, once market opens and kind of determine where our floor and ceiling are. As always, right? ETH, the ceiling and floor tend to be a little bit more contracted than where it is. Sorry, guys, my mic was really far away. Sorry about that. So the ceiling and floor, as always, right, tends to be a little bit more contracted during ETH as oh my God, sorry. All right, I hope this sounds better. Um, the ceiling and floor tend to be a little bit more contracted during ETH just because we don't have as much trading volume. So we will check our ceiling and floor at market open when we kind of start our live trading to see where those are. They've been playing very good so far. So I might actually look to those to see if there's any sort of high probability bounces or rejects in those zones. So market looks okay today. We've had a pretty messy yellow box. And we actually, let me go look at open real quick. We actually had a weird open. Let me zoom in on this first 15-minute candle. So we did gap down a little bit, which isn't terribly surprising. We had a lot of earnings yesterday after FOMC, so it was just like volatility on volatility. I think we had like Microsoft and Nvidia, like everybody was having some types of earnings. So I did not participate in any of that, but we ended up gapping down a little bit, actually quite a bit. Wicked up into yellow box and then quickly came back down. We actually had a yellow box loss yesterday because we started below it, ended up breaking back into yellow box, breaking above it for a tap of our average range and our ceiling, and then quickly came back down. Mm. Full transparency, guys, during ETH, um, the team went crazy on gold last night. I ended up taking one gold trade long. A Train somehow managed to bottom tick that thing, and I think everybody made some pretty good money last night. So I know a lot of people are probably going to be pretty tired this morning because I think a lot of folks were up late trading gold. But we had a great day on ES yesterday, so let's have another one today. Let's find some levels. Okay, I don't think we've actually moved too much, honestly, since what we mapped yesterday. So here's our wave one daily, and we actually love this because, as we said yesterday, we kept looking at our options analyzer on the wave one daily. And we had kind of starting on Monday, we were having an H2 and H3. On Tuesday, we ended up having an H4. So we had this great, essentially, bull run on the Wave 1 daily. And if we go look back at some of the lives, you can kind of see that visual. And one of the things that we were looking at was this like 7,012 level. There was an open state at 7,012. So now this is very interesting, right? Because we ended up making that L1 yesterday and we revised back below pivot due to that L1. And that open state is no longer there. You can see that this was kind of what we talked about as we've been looking at the Wave 1 daily this week in general, right? We were saying that ES is set for a little bit of a reversion back down. The question was, when and how large was it going to be, right? And so we knew that we had a really low percentage of probability of continuing higher because that percentage of an H4 was pretty low on our options analyzer. But our big question was just when, right? We were above the 20% odds. We were eyeing an open state up at 7,000. Obviously, FOMC ended up pushing us down, giving us that first L1 yesterday, and now it's totally reset our percentage odds as well as our potential for the upside. So you can kind of see to go on a bull run of that similar magnitude that we did in this last couple of days. Now our new open state kind of sits at 7,117. So kind of cool to see how our fractal charts do change like that. And that 7,012 level is not, necessarily super valid anymore. But the other thing that's interesting is it does sit at this 50% odds on our chart is 7,012. But you can now see that between 6,000, 6,900 and 7,000, we have quite a bit of clusters. Whereas a couple days ago, if we go back to those Wave 1 dailies, there weren't very many clusters there. So kind of fun to see in real time how the Wave 1 daily does work. So we're now in process of creating an L2 on our Wave 1 daily, and we are officially in a bearish cycle now on our Wave 1 daily, which is great. And just because, right, we're saying it's a bearish cycle, or just because we're saying it's overextended, odds of a L2 are pretty high, right? 50%. So we can kind of maybe see anything today. But oh, I don't actually want to cancel that. Sorry. But again, this is a good visual of just because we were at an H4 and we were saying there's a really high probability of going down, it doesn't necessarily mean we were going to dump 100 points. It just meant that we were probably going to have a red day, very, very high probability of a red day sometime very soon. So, not seeing anything super obvious here on the Wave 1 daily. I do see an open state here at 68.82 and a quarter and 68.41. But the one reason I'm not really going to spend too much time on this 82, if we find other areas of resistance there on our smaller time frames, we'll mark it. But it's really not that far away because it's just past our 80% odds, which means ES has an 80% chance of continuing past this 68.93 zone to the downside. So, obviously a pretty high probability of moving past that if we do get there. So while 68.82 is a supportive open state, I'm not going to use this as just kind of like you know, a holy grail of a bounce area. Okay. So our 7 wave 60 minute, let's go look at that. Um, Ways in open state is what happens on our fractal charts when we basically complete a wave cycle. So because our fractals charts are kind of like an aerial view and not showing linear, and we can kind of see that in this example, right? So for example, this particular point on the chart all the way back here is actually showing 6910, and you can see that if we go over here, this is showing like 6941, and even down here it's showing like 6900. So this chart is a little bit more sinusoidal as opposed to linear, where it makes long waves and short waves and basically just visualizes the pattern, right? Instead of linearly showing where price action has gone. And so at the completion of a wave, we create these open states, which you can kind of see as like a supportive or resistive area on the chart that says price was unable to make it any further after this long wave pattern was completed. So we could expect for there to be a little bit of a struggle as similar volatility exists on a future wave. So for example, right, on the 7 wave 60 minute, let me zoom in a bit so we can see this a little bit better. It's a little bit messy, right? But there's a really, really crazy long wave that formed on the 7 wave 60 minute all the way back here where we had 21 highs. And that wave finally switched to a bearish wave at the end over here, and we created an open state. And then we had this wave down barely for like maybe a day. Then we came back up. We had another open state here, which ended up actually getting closed. But that was an open state that was created historically. We came back down into a short wave, came back up into a long wave. At the end of that long wave, we had this open state. So you can kind of see that as every bullish and bearish wave completes and goes back to the other side of pivot to create a different wave, the very, very end of it creates this open state, which basically says, hey guys, historically, price struggled to continue higher um, on this kind of volatility run of either to the upside or the downside. So we can expect to see, um, limited volatility movement past where those open states were. I hope that makes sense. Mm. So Dark Horse, you have a question. This is a really good question. Why are Milk's Wave 7 60 band zones different than yours on the fractal chart? There's two reasons that could be. Um, the first reason could be he may be looking at a different quantity of days to load. So I'm simply just looking at 50 days of history to kind of find my open states. So he has a 7 wave 60 band zone. So let's go look at like 200 days to load, for example, and see if it's different. So we can see 50% odds is at 69.36. Let's go see what it looks like on the 200. So on the 200, our 50% zone is 69.3475. So it's very possible that he's maybe looking at like 200 days to load or just some different time frame. The other thing to think about as well is we can see some changes on these percentage probabilities day over day. The probably more obvious answer is that he's just simply looking at different days to load. And again, the reason those numbers are going to be a little bit different depending on how many days we're loading is because it's just pulling more and more and more history to say, all right, for the past 50 days, right, price struggled to get above 69.50, let's just say 20% of the time. Past 200 days, it was a little bit larger of a range, for example. Even if we would go to like 400 days, so we could see the 50% at 69.35. If we go to 400 days, our 50% is at 69.33. So not too much change, but there is a little bit of variability there. So he's probably looking at different days to load than me, which is why it's kind of nice to do those comparisons to see that, to see what kind of variance in volatility there has been in the past history. Um, and so, yeah, Dark Horse, one of the things that we really did actually uh, during March, if anybody recalls, and we've talked about this in our performance reviews in Ascend as well, March was one of those really crazy months, March and April, because if you guys recall this year, that's when Trump started announcing all of those tariffs, and it just caused insane volatility in the market. I mean, if you looked at the tape on ES, it was trading so thin, and you could honestly trade 2 micros and make $1,000 in a day pretty easily. And so one of the things that we were very, very cautious of while we were trading was to, first off, be a little cautious of the yellow box because the yellow box tends to look at 200 to 250 days of volatility. And so with 200 days of volatility, you tend to smash those really, really crazy volatile days that are a little bit more considered outliers. Because looking at an average, you're like, well, okay, there's one day out of 200 that was crazy. So that like range is not going to be insane. And so what I was kind of doing during a lot of those tariff things and during that month, I was actually decreasing my days to load, just preparing for a thin tape and really, really high volatility. And so kind of a neat thing that you can adjust with fractals is your days to load, just to make sure that like you're looking at this from a couple different perspectives. If you're, wanting to smooth your levels based on recency, sometimes a lower days to load is a good way to go. And then of course, if you want to look at overall market dynamic from a larger perspective, greater days to load is a good way to go. There's not one right way to do it. Sometimes I would even recommend looking at multiple days to load, but it's kind of one of the things that we found kind of back in April. Um, Blaze, I don't want to say one is more valuable for the reasons I just talked about, right? Like If you go for lower days, you're going to get more recency and see like a smaller zoomed in picture of how the market's been moving from a volatility perspective. And then the larger time frames are good from just seeing general market sentiment. So like for example, on the Wave 1 daily, my standard is to look at 200 days of history. But one of the things that I actually do think is really interesting is like you can go and load 15,000 days. So I'm going to do this. The chart's going to look so silly because there's like crazy amounts of data. Look at all these purple data. So it's very difficult to see. But looking at 15,000 days of data, this is like multiple years of data. So this actually gives you a really, really good perspective of like how the market has cycled for the past probably like, I don't know, 10 years or something, right? 15,000 days is crazy. And so you can actually see these really like large open states that are showing you like, hey, in the past 15,000 days, this is what volatility has tended to look like. And then even too, if you do go into Options Analyzer, you'll see a little bit different data set in regards to the probabilities of making like H2s and H3s. So a lot of times if people are looking to like buy in on equities or do like swing leaps, people will look at like really, really large time frames. But because I'm mostly a day trader, I try to keep it to, the smaller window and look at 200 as opposed to 15,000. So I would say there's no perfect waves, but um, playing with the waves is kind of fun, especially just to see how different like the open states look and how different the odds are. But more often than not, they're not too different. Like if you would load 200 versus 15,000 on ES, like ideally it wouldn't be too different. Because the market moves, right? The market moves in patterns. Like rarely do we break out of these patterns that we tend to see, day over day, week over week, year over year. So that's the cool thing about it. Okay, nice. Those are good questions. Okay, so back to Sunwave 60. See what we got over here. Actually, let me just go back because we've been yapping about fractals. So Wave 1 daily, we made a short wave, right? And we have this open state down here at 68.82. But like I said, I don't want to pay too much mind to it because we're just below our 80% odds of continuation, which means our wave one is probably going to continue down, right? 82 is a zone. If we have other levels of confluence on our smaller time frames, we could look at it for a potential bounce. But I'm going to be pretty kind of ignore 82 and 41 for the time being. So our 7 wave 60, we are seeing a couple open states to downsides. So the 7 wave 60 has also entered into a bearish cycle, which is good to see that we're seeing some consistency of both the wave 1 daily and the 7 wave 60 under pivot. So we're seeing an open state at 68.95, and then we actually have one um, all the way down here at 68.67, 69.60. So you could almost say 68.70. And our 10% odds are at 68.67. So let's go look at our linear chart because I think we're trading pretty high above that. So 68.67. We're currently trading at 68.93 actually. So 68.67 is not too far away. That would actually be in pretty good confluence with the bottom of our like max or our max range zone. So I do like that 67 area, especially because we've seen such fantastic volatility on ES this morning, bouncing through our ceilings on our floor. If we get down to that 67 area and we have additional confluences, I will look for potentially something there. So let's look at other charts though. But I do like that 67 area. I'm going to mentally mark that for us on the 7 wave 60. So 69, 69, and our 10% odds. Let's go look at our 20 wave. 20 wave, we don't really have any confluence at that 69.70 area that we saw on our 7 wave 60. We actually have a pretty decent amount of blank space below 68.89. So that's our 10% odds on our 20 wave 15. And then we have a huge amount of blank space from 89 all the way down to 57. When we are also making a short wave, we've moved into our short wave cycle on our 20 wave. We're below pivot and we're below vector. Don't see anything super obvious here in terms of high probability bounces. Another thing we will look at real quick is where vectors are placed across all time frames and potentially map that out. So don't see anything super obvious at that 70 level. Let's keep looking around. 69, 90, and 60. Here's our 2% odds at 63 on our 10 wave. And we do have our 5% odds at 76 as well. Now I do like the 63 area is a 2% odds. That is in confluence with kind of like that 70 area we had on um the 7 wave 60 minute. But then we also have this one at 77. So there's a little bit of resistance, or I guess support down here. It's pretty spread out though, so I don't have a huge level of confidence in that zone yet, just because it's kind of messy. That's a really big zone for today. Let's go look at the 7 wave 5 minute. So the 7 wave 5 minute is actually pretty overextended to the downside. Again, we've made our short wave. We're below our vector, and we're in this really big area of blank space all the way down until 68.76. So we're seeing a little bit of confluence there with the 10 wave 15 minute as well as the 7 wave 60 minute in that 70 to 76 area. We might want to start mapping that one out. So 2% odds on the 7 wave 5 minute at 76. We can say 77. Let's go look. Our 50 wave 1 minute's probably going to be very extended to the downside as well. Okay. So we have actually, this is nice. We have 68, 75, 60, 68, 71, 80 open states, and 2% and 1% odds on our 50 wave 1 minute. So here's the deal. We're pretty messy, I would say, in the zone. So I want to go back to the 7 wave 60 because I think we had a zone at 67 was our 10% odds, and we had 69.60 as our open state. So what we could map out is a supportive area from 68, 67 and a half, probably all the way up to 68, 77. We have this 76 zone. Then our 50 wave 1 minute was showing 75 and a half, and our 7 wave 5 minute was showing 77. So we could do 69 and a half to 77, the pretty big zone. And then just knowing that we do have opportunity, probably a little bit more dense opportunity around like 73 or 74. So let's go mark that zone. I'm going to mark it pretty big, which I'm not a huge fan of, but because there's such a density of open states across so many different time frames, let's mark the whole zone. And as we're trading and as we're observing price action, we can kind of see how open states are getting filled and, how it's actually playing to see where we would want to take that sniper entry. So I'm going to do 69, 64, 5, 6, 7, 8. It was like, let me do like 68. Let's do 68 to 77. Okay. So it's not a crazy range, but it still is a pretty big range. So, like I said, we'll mark that zone. And depending on your risk tolerance, you can kind of determine where the best place to enter that is. The one thing I'm just going to keep in mind in the back of my head is that I think the more density that we're seeing in that area is kind of like 74. Let's go to 50 wave 1 minute. We're seeing 75 to 71. So I'll probably be looking at around like 73 to 74. 76 is here. It's pretty it's pretty all over the map. So I mean another thing you could do is look to just enter at the top of it. You could potentially look to average in. The other thing I do want to look at when the market opens is where our new floor has revised to. So if we are patient with price action and don't quite get here until 15 minutes in, we're going to be looking at our ceiling data. We're, of course, as always, going to be looking at our depth of market. Our depth of market, as we even started this stream, was trading at like 101%. So we are seeing sellers get pretty active as this gets below 100% as we make new lower lows. So we want to make sure that our DOM isn't aggressively moving to the downside. And we do want to make sure that we don't have a huge amount of room on our floor. Like we don't want to see this massive expansion. The other thing I do want to say is we did make a really big gap on Monday morning ETH between Sunday and Monday. If you guys remember, like we gapped up like 40 points on ES. And so there is potential for gap fill at some point. This is kind of like right above that gap potentially. I think it kind of starts the very top of the zone. So we do run the risk of entering that gap and kind of just wanting to fill it as a whole. But we'll see. I do kind of like that it's relatively close with confluence of our max trend, our max range. But right now, that's probably the cleanest zone we're seeing to the downside. One of the big reasons we're not looking at upside zones per usual is we are making short waves across all of our fractal time frames. one of the things that we can look at for rejection for continuation down is where our vector cluster is located. And we're actually seeing pretty decent trend on vector um, over ETH session. And so right now, vector's sitting around 69.12. On the 10-wave 15, we're seeing 69.11 and a half. 50-wave 1, we're seeing 69.07. 7-wave 5, we're seeing, wow, all the way down to 68.99. So you could build a vector cluster zone from 6,700, sorry, to 6,900, all the way up to 69.12. So that's a pretty big zone. You could take the 7-wave 5-minute out of the equation and just do like, um, you could do like O7 to O12 would be where the more density of the vector cluster is. So 6907 to 6912 could be a potential area to look um, for potential uh, resistance if we do retrace back up for continuation down. So I will mark that as current vector zone. One of the reasons I don't love marking vector and like pre-market prep is just the 10, 11, 12. It changes constantly, right? We've seen on our fractals charts that when we do look at history, the vector's changing constantly. So whenever I'm trading, I'm constantly dragging my little box along with me on my linear chart just to visualize where vector is. So that's just the one thing I want to caution you guys is if you are not trading with fractals during New York session, I really don't recommend you guys marking where the vector cluster is because that is such a dynamic and like market generated information level. So honestly, like every 15 minutes, I try to look at how much it's changed. For example, too, during FOMC, I was clicking through my charts constantly. I was like, wanted to see how quickly they were changing, and every like minute, the vector was like going all over the place every time I refreshed the chart. So obviously, in normal market conditions, it's not that wild. But during FOMC, vector changed so much. And the vector cluster is actually what informed our short entry for that 19-point trade. So if you guys have fractals, I definitely recommend marking your vector. But if you don't, I do caution marking it and kind of holding it as a static level just because it does change so much. So all right, guys, that's what I'm looking at right now. Our DOM is a little bit ambivalent between buyers and sellers, but I do think if we can get down to this zone because we're not having any crazy aggressive moves, I would like to test this as a bounce if we see that our ceiling and floor data has revised appropriately, and see if we can get a little bit of opportunity here. Strategy for trimming for me, per usual, is trimming at 4 points, 7 points, 10 points, and then looking for some, what I always call my hot girl trim or like a shoot for the moon trim. But yeah, that's kind of what we're looking at today. Had a fantastic night on gold last night. So let's see if we can have a great New York session. We'll talk to you guys soon. Have a great day.